Hey there, YouTube family. Our big question today, is the markets going to crash this week? What in the markets are we expecting to move? Well, there are some charts you should be looking at, and they may be pointing us in the direction of what's next. Before I begin, hit the like. Fam, say hi in the comments. If you're new to my page, I'm bringing you guys real market data, making it simple and clear. I don't hype stocks or crypto. We examine the bearish and the bullish narrative, and we look at the charts to make our day-to-day investment decisions. If that's for you, join the fam, hit the subscribe and that notification bell. We're going to be looking at three areas that did well in the markets last week and what they can tell us about this upcoming week. The first has to be the dollar index. The dollar has an inverse relationship with the markets, which means the markets do the opposite of what the dollar does. And as you can see, the dollar is in a bullish flag, and last week it broke out. If the dollar goes up this week to make new highs, that will decimate the markets. The dollar and stocks will not be strong at the same time. That's why we have to keep an eye on it. If you're in AMC and you say, hey, Josh, is AMC going up this week? Well, if the dollar's going up, well, then the answer is no. The second sector we're looking at is biotech. Last week, it was green, despite the rest of the market being red. A lot of biotech stocks are flagging right now. Here is a chart of IBB, Shares Biotechnology ETF. It has reached historic support in the last couple months, and currently, the 100-day moving average is curling up and positioning for a crossover of the 200-day moving average. When this happened in the past, it led to all-time highs in the coming days. Let's also look at a chart of Cathie Wood's ARKK Revolution ETF, which is beginning to curl over and may be positioning for an extended move up. Our small cap biotech play is TCRT, and I'm looking at the $1.50 range for adding to my position. Keep your eye on biotech. Learn to move your money where the smart money is moving. Remember, in trading, the trend is your friend. Do not fight the trend. The third sector we're going to be looking at is energy, which also was green last week when most of the markets were red. Let's start with the XLE, Spider Select Sector Fund, which is an energy ETF. As you can see, we had a crossover of the 100-day moving average above the 200-day moving average at the beginning of the year, which was indicating a longer upward trend of oil. And as you can see, oil is still trending bullish. It looks to me like an area of consolidation at its current range and could be positioning for another leg up when the red line eventually touches the green line. If we get a bounce and another move up, that would kill the tamed inflation narrative. I want to remind you guys, the Fed's raising interest rates combats inflation through banking and housing mostly, but has no direct correlation with oil. And as I've told you guys before, the fall in oil was the only significant reason that we saw inflation drop in July. If oil pops again, then we're going to see much higher inflation, and these markets will go down 50%. If oil rips higher, so will the Fed's rate hike in September as well as beyond. And lastly, let's look at what's cooking in the area of market volatility. The VIX, which measures volatility of the S&P 500 index, has been in an upward trend since November of last year. We saw a break of that trend at the beginning of August to the downside, and now we're sitting at historic levels of support around the $20 range, where it has been consolidating. We could be positioning for a move back up to the $30 range. On Friday, I took a starter position in the SQQQ and Call Options on the VIX and the UVXY. The UVXY is a Proshares Trust Ultra VIX Short-Term Future ETF, which gives you 1.5 times daily exposure to the VIX. If you don't short stock, all of those three plays can give you a hedge on the rest of your long positions when the market, doesn't go your way. So what I do is I pause swing trading or day trading long positions and begin to day trade or swing trade those three positions. Those gain when the markets fall. And what that does for me is when those positions begin to reach areas of resistance, that's when I can switch back to going long. If you make rash or impulsive investment decisions like lump sum buying meme stocks and meme coins, you're likely going to get burned out and walk away from the markets, which I've said repeatedly is a huge mistake. There can be a lot of money to make in those plays, but the bigger game is learning to follow the markets and make money every single day, even if it's just a little bit. Consistent wins in the stock market will change your outlook on money forever. I'm going to give you my conclusion in just a moment, but before I do, if you guys want to follow my trades from day to day and join my small account challenge where we work to move $200 to $400, then download the MooMoo app pinned at the top comment as well as in the description of the video. They're offering 13 free stock if you participate in their full promotion, valued up to $32,000. and 10 free stock for simply depositing $100. If you've started the process but you've not funded your account, then today is the day because that's MooMoo's best offer to date. This is an exclusive, limited time offer. You can find me on MooMoo and join my community where I post daily. All right, in conclusion, biotech and energy look like they're setting up for a bullish run. I didn't cover small caps today, but I believe that many of them, like the ones that we discuss on this page, have already bottomed out. Now, they may drop when the markets drop, but I believe that they're going to maintain higher lows. So I'm going to continue to be looking for those opportunities and let you know when I see them. The dollar, oil, and volatility are all curling up, and they're going to be taking center stage in the days to come. I still think the month of August will largely be moving sideways until the markets decide a bigger direction. A big news day ahead of us this week is going to be Friday, August 26th at 10 a.m. Eastern, when the Fed's going to be talking at Jackson Hole Conference. We will see his remarks move the Fed funds rate, which measures the likely rate hike that we're going to see in September. Right now, a 75 basis point is gaining on a 50 basis point hike. For those who stayed to the very end, I'm going to give you a brief overview of MARA and RIOT. I get asked a lot about them in the comments. Check out this chart of MARA. The red line, the 100 MA, under the green line, 200 MA, is still bearish, and there is still a likelihood of MARA and RIOT dropping. MARA dropped to support on Friday to the $13 range, and there is still support below at $10 and stronger support at $6. It's a stock I have day traded a lot, hundreds of times in the past, but I'm not going to look at it again until the 100 and 200-day moving average touch. MARA and RIOT will continue to bleed with little pops here and there until the end of this year. These stocks do not do well until right before the next parabolic move up in Bitcoin. You don't buy them in crypto winter. Having said that, MARA was an amazing performer last Bitcoin bull run with a shocking rise in the stock price of 4,326%. So I agree, it is definitely one to keep your eye on, and I am keeping my eye on it. Leave me a comment, family. Feel free to ask me questions. Let me know what you think will happen this next week. What are you guys buying and selling? As always, thank you guys for joining me. Peace and blessings, my friend. I'll see you all in the next video.